Well, hello, Ben.
Hello.
Welcome to Cleveland.
Thank you. I like Cleveland. Interesting. Somehow, in all my travels, I had never made it to Cleveland, so and I like it.
It's a little bit cooler than where we are back
Yeah.
home, and we're enjoying that, and have some great sights around. Beautiful city. So, thanks for joining me today in this fireside chat. So, it's a little bit about the future of supply chain in context with the event, and we're going to talk about, is there a crystal ball? So, here we are in 2023, approaching the midpoint.
Yep.
The hopeful and somewhat expected market turn that we were all rallying for does not appear to be likely in the second half. What are you seeing?
Yeah. There's a lot of things that I'm seeing when I look across all of the all leading indicators and all of the metrics. But overall, I'd say we've got this slack in the supply chain now, which is I think overall a good thing. It's to me better that we have this situation than for it to be as tied up as it was for such a long time. Certainly, shippers are enjoying the great rates. Carriers are hanging on. To me, the big thing that I'm seeing is a lot of carriers are hanging on longer than I had originally thought they could.
Yep.
I think that was sort of the you could say hidden metric of like how much war chest have they all built up. Well, apparently it's a lot, which is good. To me, that's a good thing. And we're sort of midway through, and I think the last time we talked, I was saying probably by about this time, about mid-year, I'm expecting that shift to really happen, and as we often are,
Yep.
I was not right about that. But again, we'll talk about it a little bit. Better to make a call and be wrong than not make a call at all. But I still think that that's going to happen. That it'll be. I still think that we'll all at some point be caught off guard by the shift that we know is coming, but the magnitude and the timing will somehow still surprise us. But that's what I'm seeing is again, rates great for shippers, not great for carriers right now, and just sort of bottoming out right now. I think we still have a little bit. The discussion right now has been, we're probably at the bottom, but I think we have a little farther to go. Going back to if capacity is going to leave the market, I think we've got a little lower to go for that to happen.
Yeah.
But
Yeah. So you touched on it. Transportation costs are at an all-time low right now. The market has completely flipped from where we were 2 years ago, and now the carriers are struggling, as you mentioned. Shippers are enjoying the benefit. Again, the tables have completely turned from where it was just a mere 2 years ago. So that said, what data would you look for to be leading signals upstream that a turn might be coming, so that you're prepared and ahead of the curve and not caught flat-footed?
yeah, the biggest thing I'm looking at is how much freight is actually out there. So as from a data perspective, it's the load to truck ratio, total tonnage and LTL, TEUs. Everything that's going on with the ports right now is, I think, a huge leading indicator. And then inventories. I mean, inventories are starting to level out, but there's not a lot coming in behind that. And I'm also looking at commodity prices, industrial production. Everything, again, is loosening, getting less expensive, but there's just not a lot of activity pulling, or there's not as much activity pulling a lot of those commodities into industry. So downstream, then I'm also looking at big CPG, big box performance when they're coming out with their their quarterlies. And so end to end, it's when you add that, we've got all this slack in the supply chain, and then you look upstream and you say, okay, things are a little less expensive now, but you look downstream and you say, well, but some of the big boxes aren't doing as well as we'd like to see them doing. Overall, I don't see then a lot of freight entering, coming back in to sort of fill the slack in the supply chain. So, but those are a lot of the metrics. The other ones, the big ones that I'm always keeping an eye on are housing starts, that's a huge one. To me, that's a massive indicator, which everybody knows is way down right now.
Right.
Although we just had a little tick up, which is nice to see. But again, I don't know that. I think we need a little more for that to be a leading indicator of something more positive coming. But
so there's been some interesting recent developments. You've got the workers that finally came to an agreement, the port workers in LA, which was helpful. There's a 100-year drought in the Panama Canal that is starting to show an impact potentially that if it continues to go down lower, you're already seeing a surcharge on some of the ocean carriers. There's a rerouting option through the Suez, which adds delays to time. Think that has any potential major implications for supply chains?
certainly, and again, it just keeps going back to. I keep coming back to how much freight is actually going to be on the road. I mean, we have, like you just said, all these different pressures besides the macro, the obvious macro pressures. Everything you just walked through that's all gonna lend itself to less freight on the road, and so and eventually, again, what that leads to is we're gonna have to at some point start seeing more bankruptcies, more exit, more capacity exiting the market, but certainly that's gonna affect how much freight, and it's not gonna be positive in the short term.
Right. So more disruption
Yep.
potentially to come. So, Ben, let me ask you this. If you were a chief supply chain officer at a CPG company, as you mentioned, or a retailer or food and beverage service company, what would be your strategy and plan now, given the current market conditions and what you're seeing?
Yeah. My strategy would certainly be to create a nimble supply chain that's going to be successful in any environment. And what I mean by that, and this is probably for a lot of companies maybe my own, not a popular idea, but I would certainly be investing now in whatever it is that's going to make your supply chain resilient and truly nimble. And that might mean, if you're as an example, if you're 100% carrier, maybe it's time to start investing in private fleet. Yep. Maybe start having the conversation about dedicated fleets. But certainly technology, talent, all of those things that you'll need in place in order to be able to shift with the market. I would be investing in now, and I think the other thing, and probably beyond any investment in looking at the leading indicators, what do I need to invest in as a chief supply chain officer to be successful no matter what happens in the market? Is a big part of this is actually, I think, believing what you're seeing with the indicators. Yep. And I know that might sound obvious, but recently I've been in conversations or in different presentations where economists or people at in the leadership of companies basically are saying from time to time the leading indicators, it's just too hard with all of the sort of bullwhip effect in the market. It's just too hard to kind of make a call, and so we're not really sure. I actually saw somebody had on a slide, should we believe the leading indicators? And I sort of popped back and I was like, emphatic yes. Yeah. Believe the leading indicators. You may not like what the leading indicators are leading to, what it's telling you, but certainly don't ignore it or say, well, we're not really sure if this is actually telling us something. Because if what the leading indicators are telling you is not super positive for your business, it is what it is, but now you can at least plan for it and start investing in the right things, whatever that happens to be for your business, to be prepared for it. Yep. Better to be prepared for it and believe those leading indicators than sort of put rose-colored glasses on and say, well, it'll be fine, go business as usual, and then be surprised by, oh my gosh, this dramatic shift in the market that we knew was coming, but I'm not ready for it.
Well, and I think I don't think anyone disagrees that the market's going to turn. No one knows exactly when, right? Mm-hmm. What are the catalysts for that? We talked about some that could be part of that, but we went and about a month ago authored a piece that we put on the website and talked about the last 2 turns. The average turn was about 58 days. That's a pretty fast turn. So it sounds like you're talking about the need to take the time now while carriers might be struggling and shippers are benefiting from all-time record low transportation costs. But if you believe that the market is going to turn, and the turn can be very quick and rapid where you can't react, it sounds like you're advocating for now's the time to be ready, be prepared so that you're in best position for that.
Absolutely. If you're a shipper, you got millions of productivity right now, that shouldn't be like in my personal estimation, we shouldn't be, just celebrating that, pats on the back, and taking that 10 or 20 or 30 or $50 million of productivity and saying, great job on the P&L. It is a great job. Okay, we did great on the P&L, but take a significant portion of that and reinvest it into being fortifying, being nimble for what's coming. And I keep using the word nimble. It's being able to make bold decisions and shift as the market is shifting or upon that shift, because we never, like you just said, we never know the timing. We never know exactly what it's going to look like too. So, and the other thing that I'm seeing too is that it's what we're going through right now. People have called it, I've heard, rolling recession. It's very industry specific. I mean, CPG is affected differently than housing, is differently than services. Like, there's pockets where companies or industries are doing quite well, and then there's pockets where companies and industries are doing not well at all and really struggling. So understanding what it is that you need to do to invest in now, and then so again, if you're a shipper, don't just pat yourself on the back. Like, take some of that, take some of that productivity and all that value and reinvest it. And if you're, I would say, a carrier and things aren't that great right now, I mean, my advice would be find a way to still differentiate yourself and show the shippers differentiated capabilities, so that when the time comes, you're able to capitalize on that shift. Because when it comes, you don't want to be out there like, well, now we're doing better, we're getting better rates and everything, but we're not really. We're sort of in the mix. Try to be at the top, the top of that, the leading edge of that.
It comes a point where it's too late. Once you see the market's turned, there's nothing that you can do to take advantage of that or be better positioned.
That's exactly right, and that's exactly what I think. When I think about all this, is I guess this day and age we call it FOMO, right? Yeah. Like, I'm certainly there. Like, I'm fear of missing out. We're investing in technology and talent and everything right now too. So. Again, as a shipper, we're in a position to do that right now, so we're doing it, and I'm advocating for that. So yeah, you don't want to be late. You don't want to be late to the party.
Yeah. Well, any final pearls of wisdom to share from your experience that you'd like to offer?
Nothing in particular. I think that it will be really interesting to see what happens with the Fed. And with interest rates, I think that's another thing that we didn't really talk about, that's going to have a potentially dramatic effect on how fast and where all this goes. Yeah. But then, and then looking at, again, what I always try to look at is where are consumers and businesses spending their time and money. Yeah. That tells us, I think that tells a huge part of the story that we need to know. And then, I'd just say, finally, believe when you're looking at what businesses and companies are doing, where they're spending their time and money, what all the leading indicators are telling you, believe it. It's not. The leading indicators aren't lying.
Have faith in the indicators.
Yep.
Make some decisions and move ahead.
Yep. Might not like where it's going necessarily, but at least you can actually still prepare for success, even if something not so great is coming.
Yeah.
So.
Yeah. Well. Thank you. It's a pleasure having you here on the stage again.
Great to be here.
Always enjoy the conversation, and thank you again.
Yeah, thanks.
Okay.
Great to be here.
Thank you.
Thank you.